Is Circle USDC going to fall like another stablecoin, and how much are they impacted by the Silicon Valley Bank SVB collapse? What's likely to happen next week when traditional markets open? In this video, let's dive deep into this topic. Make sure to watch till the end because this is very urgent news that could impact the whole crypto space. Now, we've all heard about the collapse of SVB, Silicon Valley Bank, this Friday, which turned out to be the second largest bank to go under in US history, only behind the Lehman Brothers in 2008 financial crisis. The crypto sector is very nervous right now about the Circle USDC stablecoin, which is currently depegging below $1. And some people fear this might cause an overall bank run for more people to withdraw money and for USDC to go down further. Let's look at the real facts of how much they were exposed to the SVB situation. The total amount of cash that Circle stored at SVB was $3.3 billion. This is a pretty big number, but not life-threatening, as the total amount of reserve backing the USDC stablecoin is around $40 billion. This also matches the total supply of USDC, which means before it was $1 backing $1. So now there is 8% less of the reserves, and these were potentially lost due to SVB. Can these funds actually be recovered? And if so, how big of a haircut are we expecting? Experts on Twitter think Circle could get a maximum of 94% of their funds back, so only lose $200 million. This number was reached by looking at previous FDIC recovery process, where up to 94% of the funds were recovered in the end, and 62% were recovered right away. This is highly optimistic as it's coming from a crypto personality, so take it with a grain of salt. Another big issue comes from the price of USDC potentially depegging further, purely based on people's panic. Most crypto investors still have severe PTSD from the UST stablecoin collapse, but we have to make a strong distinction between UST and USDC. UST was never fully backed as a stablecoin, meaning for each UST there were less than $1 of assets backing it. On top of this, a large portion of the assets backing UST was the Luna token, of which its value was highly correlated to the stability of UST. These fractional backing and self-fulfilling reserve designs caused the demise of UST. In the case of USDC and all other centralized stablecoins, the designs are fundamentally different. USDC is 100% collateralized with a combination of cash and US Treasury bills. This means for each USDC out there, there is at least $1 worth of hard assets backing it. There are also no crypto assets used to back USDC, so there is no correlated risk there. You can check the regular audits on this done by the big four consulting firms. But just in case there is a bank run on USDC, let's examine how liquid the reserves are over at Circle so they can handle the withdrawals and not have a bank run situation where the price goes down faster than the withdrawal speed. Currently, Circle holds 23% of their reserves in cash, which was worth $9.7 billion total before the SVB situation. These are held at multiple institutions, including SVB and other banks, so they still have $6.4 billion in cash after the SVB funds are lost. Now, the other 77% of their reserves are held in 1 to 4 month US Treasury bills. Treasury bills are the most liquid assets in the world and are direct obligations of the US government, so there's no worries there either. These T-bills are held at BNY Mellon, which is highly regarded as one of the most stable investment banks in the world, and these funds are also managed by BlackRock, the largest fund manager in the world. Overall, these reserve holdings are highly reassuring. They are held in highly liquid assets with reputable institutions. You can't get much better than treasury bills and cash. Now, the next topic then is the potential hole in their balance sheet of the $3.3 billion from SVB. If they lose all that money, what's the worst case scenario? Well, in the absolute worst case scenario, if all banking partners of Circle fails, not just including SVB, but other banks as well, and somehow they lose all their cash, and we only take the US Treasury bills as absolutely safe at this point, this still provides an absolute floor of USDC at 77 cents. If SVB is the only bank to collapse and we write off the $3.3 billion billion from Circle's balance sheet, then USDC still has 93 cents as a floor value. You can find all the reserve backings on Circle's website. Now, assuming USDC has this $3 billion hole in the end, what can they do to recover it? Well, Coinbase has $4.4 billion on its balance sheet. And if you didn't know, Coinbase and Circle jointly own the Center Consortium, who is the technical overseer of USDC. Coinbase and Circle has a 50-50 relationship in this. So that's why Coinbase could step in to aid the situation. Circle themselves also stated that they are required by law under stored value money transmission regulation to stand behind USDC and cover any shortfall using corporate resources involving external capital if necessary. So there could even be a fundraise done. Considering the size of Circle and Coinbase combined and the nature of this hole in the reserve not being their fault, I'd imagine the fundraise will be decently easy. Most people will still trust these firms to continue operating and issuing USDC, so it's just a matter of making the incentives aligned. So what may happen over the next week then? Number one, I think soon Coinbase will announce something to help out with Circle and USDC. Number two, Circle will try to take a debt or credit facility from BlackRock or some other institutional lender. Number three, there is a very low likelihood of Circle actually imploding with SVB, considering all the public audits and the exposure is less than 8% of their reserves. And number four, maybe the Fed will actually use this event as a reason to pivot and bail out SVB. Obviously, we're getting ahead of ourselves a bit here, but we can hope, right? After all, it's hard to imagine the US Fed actually allowing another bank fallout to happen after 2008. So what can you do for risk management? Firstly, if you have USDC and you're not convinced that this will resolve itself and USDC will get back to $1, you can trade it for USDT in the short term. These two stablecoins are two completely separate companies, but they're both 100% collateralized and they're completely uncorrelated. Right now, you can get 95 to 97 cents on the dollar, and for that 5% you give up for a peace of mind, it could be worth it. I would not trade USDC for the DAI stablecoin, however, because DAI is also backed by 42% in USDC. So if USDC somehow does collapse, DAI will be in big trouble as well. This is why we saw DAI also depeg yesterday to 90 cents. But fear not, as long as USDC turns out okay and returns to peg, DAI will also return to $1. If you've done your research and strongly believe USDC will return to peg, you can buy it up right now below $1 and sell it back later for a profit. Although for the sake of the entire crypto industry, I really hope this arbitrage opportunity disappears sooner than later. Last bit of caution, do not send USDC to Circle for redemption into US dollars if you're trying to de-risk, because there could be gated redemption or even gated withdrawals if the situation does become worse. Okay, that's all for this video. Be safe, don't act irrationally, make sure to fact check if you see panic-inducing news for the next few days, and hopefully this situation will resolve itself sooner than later. Thanks and see you in the next video.